What is up, everybody? This is Stock Market Education, and today we're going to be talking about Penn National Gaming and whether or not it's a buy. Let's get into it. Penn National Gaming owns and manages gaming and racing facilities all across the United States. And Penn National Gaming recently struck a deal with DraftKings to be able to get a piece of the online sports betting segment, which is why we're going to take a closer look at Penn National Gaming today. And before we get into the video, make sure to click that like button and subscribe for the YouTube algorithm, and it helps out the channel and motivates me to make more videos for you guys. With that being said, let's go ahead and get into it. Penn National Gaming has a market cap of $4.03 billion, and they have a trailing PE of 77.43 and a forward PE of 13.72, which indicates that Penn Gaming is going to become more valuable over time. And if we take a look at their analyst estimates, we can see that the average estimates are expected to go from negative 44 cents a share in 2020 up to $1.48 a share in 2021. However, it seems that analysts are torn with Penn Gaming because the low estimates go all the way down to negative $6 a share in 2020 to negative $2 a share in 2021, and the high estimates go from $2.34 a share in 2020 and $2.76 a share for 2021, which is also why we're going to take a closer look at Penn Gaming today. And it's important to note that they're one of the most diversified gaming companies in the country, with 42 properties spread across 20 jurisdictions, with most of their gaming revenue coming from Ohio and Louisiana. So Penn National Gaming is a safer company to invest in because they're diversified and they cater to locals, which are repeater customers in the market. And if we take a look at their cash provided by operating activities, we can see that it says click the like button and subscribe for the YouTube algorithm. We can also see that it says they went from $352 million in Q1 of 2019 all the way up to $703 million in Q1 of 2020 for a percentage increase of 99.5%. So this is a company that's loaded up with cash and loaded up with cash last year. When we look at Penn Gaming's margins, we can see that they've steadily increased over the past 3 years, and they have gaming margins of 61.7%, which is the highest amongst their peers. And some people might be wondering why MGM or Wynn or Las Vegas Sands aren't considered their peers, because they're also gaming companies. And that's because Penn National Gaming owns and operates local hotel and casinos instead of traveler destinations like MGM, Wynn, or Las Vegas Sands. And if we take a look at the bottom of their income statement, we can see that net income decreased substantially over the past year, down more than 50%. However, most of this is because of tax benefits, so it's not as bad as people might think at first glance. And the reason why companies do this is because the less net income a company reports, the less they have to pay in taxes. So their net income looks bad at the surface. However, when you look into the details, it's actually beneficial for Penn Gaming because they pay less in taxes this way. And if we look at this chart here, we can see that Penn National Gaming is more recession-proof than the Las Vegas Strip properties. And the first bullet point says regional revenues remained relatively flat through the Great Recession and were above pre-recession levels by 2011. Since we're going through a recession right now, Penn Gaming might be a steady, more reliable stock than some other casino stocks. And if we take a look at their sales growth estimates, we can see that they're expected to go from 12.6% in 2020 up to 16.1% sales growth in 2021. And if we take a look at their total revenues, we can see that the revenues went from $3.1 billion in 2017 up to $3.5 billion in 2018, and then shot straight up to $5.3 billion in 2019. So Penn Gaming grew substantially in 2019 in terms of revenue, and the new addition of sports betting with DraftKings, they seem to have tapped into a new stream of revenue. Now, an important thing to take into account is that Penn National Gaming sold their only Las Vegas Strip property, the Tropicana, to their landlords, Gaming and Leisure Properties, which is a real estate investment trust that I was invested in back in 2018, and they sold it for $337 million worth of rent credits. Not dollars, but rent credits for Gaming and Leisure's properties, which is they could have gotten more rent credits out of the property. Probably the least valuable property on the strip is the Tropicana, but $337.5 million, well, not even dollars, rent credits. Take Circus, which is a dump and not even on the Vegas Strip, sold for about $825 million last year or something close to that number. So $337 million. I think that's just they just wanted to get rid of that property for a while and they saw an opportunity to do it. But when you take into account the selling of Tropicana, you also have to take into account their dramatic increase in revenue over the past 3 years and their flat recession-proof business model and their high margins and their 99.5% increase in cash and their new growth strategy of online sports betting. Penn National Gaming could be an interesting buy for the future. Thank you guys for watching the video. Make sure to click the like button and subscribe if you enjoyed this video, and have a great day. Bye.